we think that even though these companies are private and they don't have like quarterly earning reports, we do think that there's a lot of metrics and news and interesting things that come out, on a weekly basis that are tradable, and we want to present that to users within the product experience natively.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show that knows that summer is never over if you never sell. My name is John Gillen, host of Milk Road Macro. Today is Tuesday, September 2nd, and we are joined today by Alvin Hsia, who is one of the most dynamic builders in the entire space right now. Alvin is a multi-talented serial entrepreneur and the co-founder of Ventuals, a trading platform built on Hyperliquid X that is focused on perpetual futures for pre-IPO companies. We're going to talk about the huge explosion in perpetual futures, how Hyperliquid has come out of nowhere to challenge some industry titans like Binance, and most importantly, what do you need to know to understand all of this and navigate these markets in a way that makes you a savvy investor and trader. So if you've ever wished there was a way you could invest in a company pre-IPO, then this is an episode that you truly cannot afford to miss. Smash the like button, subscribe to the channel, share this episode with someone who needs to hear it. And as a reminder, before we dive into today's episode, I need to tell you about something that is changing the game, Milk Road Swap. With Milk Road Swap, you can seamlessly trade on Ethereum, Base, Arbitrum, and Solana all in one place. And the best part, it's got some of the lowest fees out there. So make sure you check that out. The link is in the description below. Today's episode is brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. And KGeN, the verified distribution protocol, changing the growth game. And without further ado, welcome to the Milk Road Show, Alvin Hsia. How are you?
I'm doing well. Thanks, John. How are you?
I'm great, man. I'm really excited to have you here. There's a lot of questions I have, a lot to learn. I wanted to just start with where your thoughts are on the current market as we go into September. There's a lot of talk about, a down month in September, but a very bullish Q4. What are you looking forward to? What are you seeing in the market right now?
Yeah, I would say that I'd preface with, I'm not sure, if I have the most sophisticated market overall, like kind of macro market views, but when I think about it, personally, my guess is that we're probably somewhere in the middle of the cycle. Certainly doesn't feel early, just with, Trump and Kanye launching meme coins and a lot of the things that we're seeing around DATs. And so, yeah, if I were to guess, somewhere in the mid stage of the cycle, the Fed, seems intent, and Trump seems intent on cutting rates. And so that usually is good for risk assets and, of course, crypto.
Yeah, so I think this has been something that a lot of people have differing opinions on, but it doesn't seem like we're near a top. I think, I had an episode with Scott Melker last week, and I asked him about this. A lot of people have been saying, oh, we've topped, but none of the technical signals for a top in Bitcoin or crypto have been put in yet. So I kind of agree with you. I think we're somewhere in the middle. It's hard to say exactly where. Look, I think I wanted to ask you a lot about something called perpetual futures contracts. This is an area that you've given a lot of attention to and specialization. Let's start off with some basics here. I think people are familiar with some things like native tokens and decentralized exchanges, automated market makers. But perpetual futures contracts are a very different thing. Tell us, what is a perpetual futures contract and what is so important for investors to understand about them?
Yeah, definitely. So a perp stands for perpetual futures contract. And this is a type of derivative instrument that was brought to market by Arthur Hayes and BitMEX in 2016, 2017. BitMEX was one of the earliest kind of centralized exchanges for crypto, but it actually has a history beyond that. It kind of first appeared in a few different academic papers in the 90s as kind of like a theoretical instrument for people to be able to synthetically trade assets without needing to actually like exchange the underlying. And so if you're familiar with what a futures contract is in TradFi, these are instruments that basically traders will use to hedge the price of commodities like oil or copper. And it was brought to crypto by BitMEX. And the idea is that you don't actually ever have to settle the delivery of the underlying. And so what a perpetual future is it's instead of, having expiries where the contract is settled on a weekly or monthly or quarterly kind of basis, it's actually like a much more compressed version of that. It settles or rolls over, I should say, every 8 hours. And so nothing sort of needs to happen for you to kind of continue holding the position. And it kind of like rolls over every 8 hours. And the way that, the prices of these perps stay in line with whatever the underlying asset is through a mechanism called funding rates. So there's a funding rate that is kind of set based off of a reference price between the perp and the underlying. And basically what happens is if the perp price is higher than the reference price, then longs will pay shorts an interest rate. And then if it is inverted, then shorts will pay longs. And so that's how the price of the perp kind of stays in line with whatever underlying asset it's trying to track.
Gotcha. Okay, so there's a lot to unpack there. What is some of the primary reasons why investors prefer or might prefer a perpetual futures contract as opposed to a spot market or some other mechanism to get exposure or to express their thesis? Like, what are the things that make this an attractive way to engage with the market?
Yeah, definitely. So there's a couple things here. The first one is that perps have leverage built in, so you can get multiples of leverage, 2x, 3x, 10x, sometimes even up to 100x leverage on your underlying capital, and be able to go long or short this asset. The second is that you can short assets. So in spot you can't really short, and so perps allow you to kind of express a short view as well, which makes it very useful to hedge out exposure that you might have to the underlying. What we've seen, with crypto is that perp traders, tend to do a lot more volume. They tend to be more actively trading the underlying asset, and due to the way that the funding rates work, it's a type of instrument that people don't tend to hold for a very long time. It's more for kind of like short to medium term directional views.
Gotcha. So you were talking in your prior answer about how there are certain times where the shorts pay the longs and certain times the longs pay the shorts. Just so we understand a little bit of the mechanics of this, I know it's highly technical, but basically what you're saying is that if whatever the underlying you're speculating on, or you have a contract on, not speculating, let's whatever the underlying is you have a contract on, if the spot price of that moves up, then the longs, the shorts pay the longs, and if it moves down, then the longs pay the shorts. Explain a little bit about how that works. It's basically like whichever way the underlying asset moves in price, that determines who pays who on which side of the contract. Is that the idea?
Yeah, so it's actually more about the difference between the price of the perp and the price of the underlying. So if the price of the perp is higher than the price of the underlying, then longs will pay shorts. And so what that means is that every hour, people who hold long positions will pay the people who hold short positions some interest rate. And that interest rate is kind of set by the perps market. There's usually a formula that you can see around how that interest rate is defined. And the funding rates are sort of like the mechanism that serve to make sure that the perp price kind of tracks the underlying reference price. Does that make sense?
I believe it does. Yeah, I think there's a lot of technicals in this, but I just wanted to kind of like get some of the mechanics of this across to the audience so that they understand what this is and how it works and how the pricing makes sense and who pays who is determined. So those mechanics are there. I think that what you said before is a lot of investors use this to hedge their portfolios. And in traditional finance, there's been a lot of different ways to hedge portfolios one way or the other. Perpetual futures, like you said, became a thing with Arthur Hayes and BitMEX. What about this particular, I guess, method of hedging, made it so popular with crypto? Why did this need to wait for crypto digital assets to become a popular mechanism for expressing a thesis in the market?
Yeah. So I think that a lot of the way that these new types of financial instruments and derivatives get adopted have some element of path dependency. So in TradFi, the primary way that people have hedged exposure has been through the options market, right? And options are another type of derivative that has a lot of leverage built in, but the way that the payoff functions work are different than perps, and there's a separate set of kind of like math that you need to do around implied volatility and the way that your options, are exposed to changes in the underlying. And with crypto, they just didn't have as much time for like the options market to develop and get as large as it has, the decades that it has had to in TradFi. And so I think because perps kind of like, came into crypto like earlier on in its life cycle, there was just, a way for people to kind of adopt this new type of instrument before the options market in crypto got really, really massive and hard to kind of displace. So I wouldn't necessarily say that, there was anything about blockchains or about crypto assets specifically that, make them much, much better kind of for perps. I think it's actually more just of the way that things played out. And the fact that perps were introduced within crypto while the options market was relatively nascent, and it just happened to be the type of derivative that people were attracted to. My belief is that perps are a much more retail friendly kind of leverage instrument compared to options, and so I think we've seen that play out within crypto. Like retail has gravitated much more towards using perps to get leverage on directional exposure compared to options. And I think that as perps kind of continue to grow and the infrastructure for creating new perps markets continues to grow, we might even see that spill over into kind of more TradFi type assets as well.
Yeah, I agree with everything you said there, and I'm really interested to see the evolution of perpetuals, and as Wall Street and crypto sort of come together, see how the market just digests this and what comes of that. There's all these stories from Wall Street of people like Wall Street firms trading futures options on commodities like oil or pork or whatever it might be, and then like forgetting that they're still holding a contract, and so then somebody comes up with a big shipment of potatoes or something at some Wall Street firms like, here's we're fulfilling the contract type of thing. So that's another thing about this, is like you don't have to hold the underlying asset, but you can still express the thesis in the market. I want to pivot now to talk a little bit about Hyperliquid, because Hyperliquid has been this enormous challenger to a lot of traditional crypto industries leaders like Binance or Coinbase, and their business has been very much focused around, at least initially, perpetual futures contracts and doing this in a decentralized way and a much more open way. We've had past guests on Milk Road Show like Zeneca and Jesse Eckel say that Hype is their #1 favorite L1 for the rest of this cycle. It went from $6 to a $50 high and is now sitting at a market cap of just under, I think, $15 billion. So this is a huge explosion in only a few months of being in the market. What are your thoughts on Hyperliquid and the Hype token? How high is the price going to get? How big is this going to get? Like, what do you see as the market here?
Yeah, I mean, I think Hyperliquid has captured the imagination of a lot of crypto participants in a really big way, I think, and in a really unique way compared to some of the other kind of ecosystems and assets that have come before it. And I think there's a few reasons for that. I mean, I think the first one is, they just built a really, really excellent product with their perpetuals, like their perps kind of decks. They started it in 2023. And people, started to really use it in 2024. And, when I first heard of it, the main thing that I thought about was just the fact that it listed new pairs much, much more quickly than any other decentralized exchanges, perps exchanges did, and faster than a lot of centralized exchanges as well. And so I think that sort of like strategy at the beginning really worked out for them. They were able to capture a lot of the volume and flows for the new pairs that people wanted to trade. They were very aggressive with listing them. And then as people, started using it because it offered pairs that they couldn't get elsewhere, they realized kind of how good of a product it was, and just, ended up sticking with it. And they were able to create capture more and more of the share of wallet for traders. And then I would say that, where they really kind of locked in and cemented themselves as, a premier kind of crypto product and now chain is when they did their airdrop in November of 2024. I think, it was one of the largest, if not the largest airdrop kind of done in history. And I think, there are a few things that sort of went well for them. The first one is that they didn't raise any VC money. And so they didn't have, as large of an existing kind of holder base that people were afraid of, token unlocks and kind of token dumping from that. And they just airdropped such a massive amount of the token supply. And so, I think crypto places a large premium on, the almost kind of divine conception of tokens. And, Bitcoin was the most, divinely conceived token, out there. And ETH, had a relatively similar story with it just being a completely open, kind of fair, token that anyone could buy when it first launched. And so I do think that there's a narrative there that they've been able to cement through kind of the airdrop, and it created a lot of loyal, a lot of loyal users, a lot of loyal community members. And I think that's something that has gone really well for them.
Yeah, I think that they've learned from a lot of mistakes others have made, and they identified a really big niche in the market and have just sort of, just like you said, right time, right place. They've played a lot of things really well from the marketing perspective, the execution perspective, certainly. They have captured now an estimated 80% of decentralized perpetual futures market, and they're doing around $10 to $12 billion in daily volume. Obviously, this spikes up sometimes. I've seen it as high as 30 billion, but that's an incredible amount of volume for this protocol that just kind of spun up pretty quickly. In your post recently, I've noticed you've been highlighting the importance of order book liquidity in perpetuals markets. How does Hyperliquid, what do they do to specifically address this need for liquidity, and what challenges have they come up against, and how they resolve those in terms of differentiating their solution to solutions you would find on other platforms, centralized exchanges or decentralized?
Yeah. So I think at this point, Hyperliquid is such a large trading venue that market makers will just want to market make there because they know there's a lot of retail trading volume that happens there. But I think what's maybe more interesting to kind of unpack is how do they get to that point, right, where they became this kind of premier venue? Because they're actually very well known for not having any sort of special incentives to any market makers on Hyperliquid. It's a completely kind of fair playing field for anyone that wants to make markets on Hyperliquid. But one thing that they did early on that I think really helped them attract those retail flows and trader flows in the beginning is with their HLP vault, right? So HLP is a vault where users can deposit into, and that capital is basically used by Hyperliquid to execute market making strategies in their order book. And at the very beginning, HLP accounted for a large percentage of the kind of maker liquidity that was used on Hyperliquid. And today it's actually much kind of lower percentage, because they have other kind of external market makers coming in and quoting tighter spreads and providing that liquidity. But early on, it was higher, and the way that they incentivized user deposits in the HLP was one, they actually ran a good market maker. The team has a trading background, and so they had the kind of know-how and expertise to run an effective market making strategy. And then two is HLP received, a portion of just exchange fees as well. So there was kind of this constant stream of revenue that was funneled towards HLP. So I thought that was a very kind of, clever way an effective way to initially bootstrap liquidity on to Hyperliquid. And now, because it's such a kind of, a venue where people are trading a lot on, market makers just kind of go to provide liquidity there because there's just a profit opportunity and they don't have to pay for any of that through incentives.
Gotcha. Yeah, deep liquidity solves a lot of problems.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. The best audience to distribute your product to? Your super fans, duh. But what if you haven't found them yet? That's where KGeN comes in. They help businesses scale digital distribution at a price that makes sense. KGeN's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGeN network today at milkroad.com/KGeN, spelled KGEN.
Something else I've read in some of the comments you've made about Hyperliquid that really stuck out to me, I wanted to get you to comment on this. You said that this was not always true, and this is something that Hyperliquid, and I think with the Hyperliquid improvement protocol or proposal number 3, you're saying this is what the reality that we're moving towards. But you said if you can find a group of people who want to speculate on a number going up or down and connect it to the real world with a credible oracle, you can create a market. And that is, to me, like, there's so much in there. Break that down for us. What is so exciting to you about this opportunity, and what is this going to unlock for the future of perpetual futures contracts?
Yeah. So I think where it start there is that even with the impact that perps have already had within crypto, I think that, we're just kind of scratching the surface for what we can use perps for. So perps, still to date have primarily been used for creating markets for crypto tokens. But there's no reason why, they're limited to that, right? So the way that, a perp kind of works at a fundamental design level, all you really need is to kind of define what the market is. You need to define a reference price that is used as the price oracle to facilitate the funding payments mechanism that we talked about earlier. And then you just need to attract flows and liquidity. And so you can really, build a perp market around, like I was saying, anything where you have a number that kind of goes up and down. You could build, a perps market that around pre-IPO companies valuations, like we're doing at Ventuals. You could certainly do it around, a commodity like gold or an equity index, like the S&P. But you could also build it for, weirder and wackier things like, you could build it for weather. You could build like a weather prediction market using a perp. You could build a CPI or US GDP prediction market using perps. As long as you have, something that is referenceable, a number that's referenceable, you can kind of create a perp instrument around it. And so I'm really excited by the opportunity that this sort of unlocks, in the sense that, I think there's a lot of markets out there that aren't like crypto natives, so to speak, but can use like perps to kind of like bring them online and bring them on chain. And what I'm really excited about is just the opportunity that presents. Because we can start to, appeal to people who are less crypto native, and they might have some interest, in some niche or some other thing. But you just kind of like under the hood, it uses crypto, and perp specifically is like the instrument for them to take bets on or speculate on or get exposure to or hedge something that they want to.
Yeah. So this leads us really nicely into what I really want to talk about, which is Ventuals, which is the trading platform that you've been working on, and that you're live on testnet on, I believe, right now. But this is supposed to be a platform specifically built and focused on perpetual futures contracts for pre-IPO companies. I'm really excited to hear more about this because I think this is going to be a huge unlock. Tell us, what is the mission here? And let's just start with that. Like, what's the vision? What is the mission that you're going after here?
Yeah. So, our kind of like core belief is that people have been left out too long of getting exposure to technological innovation that's been happening all around them, while tech has become a bigger and bigger part of the global economy. If you look at US tech companies, in the 90s, the median time from founding to IPO was about 4 years. So like Jeff Bezos took Amazon public at around a $500 million valuation within 4 years after it was founded, which in today's terms is like basically unheard of. You have companies like Stripe, who have been it's been 15 years since they were founded. They're worth $100 billion and they still have yet to go public and have no kind of have expressed no indication to at all. There's been this trend over the last 20, 30 years where private companies have decided to stay private for much, much longer. And so the steepest part of the value accrual curve happens in the private markets, where you need to be accredited, you have to have access, and most investors can't kind of participate in. That's at odds with tech becoming more and more mainstream and part of like the kind of global news cycle every single day. And so, we sort of see this, we saw this mismatch, and we felt that, there's a really interesting and exciting opportunity here to use kind of decentralized markets to bring normal investors exposure to these assets.
Gotcha. So I have a lot of questions about this. In terms of like how you actually go about doing this, right? Like, are you like you're building this on the Hyperliquid platform? You're doing this with companies that are pre-IPO. Are you what are the requirements that have to be met in order for you to create one of these markets for one of these pre-IPO companies? Is it all just based on how much liquidity you have for demand, or is there like a certain other kind of like technical hurdle that you're facing? Like, how do you go about actually creating these markets and getting them into the hands of retail investors who, like you said, up until this point have been largely regulated out of participating in the huge amount of upside that is available in these kinds of markets?
Yeah, definitely. So we are building Ventuals on Hyperliquid, and specifically there's a new standard that the Hyperliquid kind of team has come out with called HIP3, which stands for Builder Deployed Perpetuals. And what HIP3 does is it sort of makes the underlying infrastructure from Hyperliquid's like order book and margining and liquidation infra available to builders to use. And this is a huge kind of unlock, because historically it's been very, very difficult to build a perps exchange from the ground up. There's a lot of really gnarly kind of performance requirements for operating like a very kind of robust high performance perps exchange. And so Hyperliquid's infrastructure is very battle tested. It's proven. It's done over $2 trillion in volume cumulatively. And they're making that infrastructure kind of available for builders to use. So that was the first kind of unlock. And then when you're building on top of HIP3, there's a few things that you need to do. You need to define the market in a way that has kind of clear parameters, so people know what they're trading. You have to define a price oracle, which is that reference price for what you're using for the underlying. And then the third is you need to bring kind of like liquidity and flows. So flows meaning like traders that want to trade this thing. With the way that we've kind of structured it is we've defined, people are trading the valuations of private companies. That's the market definition. The price oracle I can go into, but basically uses a combination of, like secondary transactions that are happening on TradFi secondary markets, but also a exponential moving average of the perp price itself. And I can explain more kind of why we made that design decision. And then third is flows and liquidity, right? So we're building a front end. People have been using our testnet app, and we're also speaking with market makers to provide liquidity for these markets. But those are the three kind of key ingredients for launching a new perp market.
Yeah, so I think that you've written a lot about the oracles that you're going to be using to get the price feeds for these contracts, and how they're going to offer additional protections or like safeguards against some traditional concerns, I guess, around price manipulation or just like different things that go into the creating of these contracts and making them something that investors can trust, right? Because like if you're trading a perpetual future contract on a pre-IPO company that doesn't have the underlying asset behind it, right? Like investors still need to feel like they can trust the contract, they can trust what's going on. Like what are some things that come out of this HIP-3 that you've talked about that are going to protect investors that they need to know about and that are attractive that they should be excited about, basically?
Yeah, I would say that the way that I would think about it is HIP-3 provides a very kind of flexible and generalizable framework for people to define and deploy perp markets. But it is important, as an investor or trader, that you understand, how that market is being constructed. So HIP-3 kind of provides the framework, or like SDK, so to speak, for how to kind of create a market. But the actual market definition and the way the price oracle works is quite important to understand or evaluate for when you're trading one of these markets. So I would say that as more of these markets kind of come online, like understanding like how they work is going to be quite important for investors to kind of know. There isn't anything that I wouldn't say that there's like built-in protection for investors with HIP-3. It's more so that it provides a generalizable framework for builders to build robust markets that are harder to manipulate.
Gotcha. Right. Yeah. So a lot of this comes back to the depth of the market, the robustness of the market. And so I think you guys have been very successful already in bootstrapping activity on your new testnet. You spoke a little bit about bringing in liquidity, bringing in traders, and drawing them in and creative, positive incentives there. What's the strategy been like that? And what do you think is the roadmap for scaling Ventuals into the future?
We launched our testnet a little over 3 weeks ago now, I think. And honestly, the reception has been really awesome, and maybe even kind of greater than we expected. We have seen over 16,000 traders on testnet now, and testnet has done over 200 million in trading volume, and that's with everyone starting with a relatively small amount of money. On testnet, due to the way that the faucet works for getting mock USDC, we can only give everyone $500 of mock USDC, but even that small amount per person has resulted in over 200 million in trading volume over the last 3 to 4 weeks. So I think the reason for that has just been like the concept has resonated with people. I think people are hungry for new interesting markets to kind of trade, that especially ones that feel a little bit more like serious, maybe, than like the kind of meme coin like ecosystem that has captured a lot of the kind of trading volume over the last 18 months ish. And so yeah, I think we've been pretty happy with the reception, and what we're doing kind of leading up to mainnet is just making sure that when we are live on mainnet, there is robust kind of order book liquidity for people to trade against. And we're thinking a lot about just like, the overall product experience for trading on Ventuals. We think one of the things that, you see in the public stock market is that a lot of the volume is kind of around like discrete events, like earnings reports or like company announcements or some macro event. And we think that for some of these private tech companies like OpenAI, SpaceX, et cetera, there should and are just as many tradable moments, right? Like we want to kind of give people the information and the news feed and the kind of developments that matter to them, that cause them to kind of like think about do I want a long or short based on this thing. We had SpaceX rocket launch the other week, like OpenAI's competing in a really intense way with other AI model companies you can see, a lot of the way, like their user growth. You can see, how their models compare against other companies' models using like benchmark valuations. And so we think that even though these companies are private and they don't have like quarterly earning reports, we do think that there's a lot of metrics and news and interesting things that come out, on a weekly basis that are tradable, and we want to present that to users within the product experience natively.
Right. Yeah. So this is one of the things that's most exciting to me about this development is that it makes markets much more responsive to investors and traders and allows them to get much more nuance and just like speed and accuracy around how they articulate their views into the market. So that's all really exciting. And this is, like you said, like you've already bootstrapped a huge amount of activity organically. There's tons of interest. I'm sure this is going to explode from here. Look, we're coming up on time here. So I just want to kind of wrap up with one question around the future of this, right? Because we've talked a lot about how in legacy finance and TradFi, there's already been some ways to, trade options, and like articulate a thesis about the future valuations of things and so forth. But this is a kind of a new thing. As the decentralized and the crypto perpetual futures world moves more mainstream and sort of comes into the fold of Wall Street, how do you view this developing? Like, are there regulatory hurdles that we need to bring down? Is there certain kinds of adoption that you'd like to see? Like, what is the next step for perp futures as it matures into a major part of the financial ecosystem in the West and beyond? I guess globally, really.
Yeah.
It's a big question, I guess, but I just want to know where you see it going from here. Yeah.
Yeah, definitely. So I think like there's maybe a few ways I would look at this. One, the first one on the regulatory front, it is widely anticipated that the CFTC is going to come out with kind of new guidance around the ability for US retail users to trade commodity perps. Which would be a huge unlock because right now perps exchanges aren't allowed to serve US users. So that I think will do. If it once the regulation comes out, will definitely like unlock a lot of usage and kind of flow from US users. And then I guess beyond that, there's work to do to bring a lot of markets on chain in the form of perps. Like right now, like we were talking about earlier, it's primarily just crypto assets that are traded as perps. We're doing work to kind of bring pre-IPO companies, and there are some other teams building on Hyperliquid and elsewhere that are bringing on commodity perps and equity index perps and things like that. But it's still pretty early days for all of that. There's certainly like different approaches that people are taking and various kind of trade-offs that come with those approaches. And so there's work to do from both a just kind of product and company building perspective, but then also from a retail education and adoption perspective, right? I think like we were talking about a little bit earlier, like when you start to have perps on RWAs, right? The way that you construct that perp market there's varying approaches, right? It's not necessarily as simple as just kind of like sticking a Bitcoin spot reference that already trades 24/7. Like if you're trying to trade, like NVIDIA perps, what do you do when the markets are closed, right? Like you have no reference price. And so thinking through like issues like that and how you want to kind of overcome those, I think are things that builders, various teams are thinking through and figuring out, and we'll kind of see, how the market, reacts to those and how users kind of see them. So yeah, there's I would say, there's kind of an anticipated regulatory unlock in the US that's coming up. And then there's kind of just like the unavoidable, sometimes messy, like just bringing to market process that we'll see play out. But overall, very, very bullish on, the like people working through those issues. And I think, what's very clear to me is that the demand for these types of instruments from not just crypto natives, but even outside, is continuing to grow. right? Like I think we're seeing, even in the Robinhoods of the world, just like trader activity, like people wanting, and with Polymarket as well, people just wanting to express views in the market, very broadly speaking. You see that with sports betting, political, prediction markets, as well as just like options trading on Robinhood. And so I think bringing these types of perps, to market is part of that massive kind of just behavior trend that we're seeing with users, wanting to kind of be able to get exposure to various things.
Yeah. So I think that this is, a continual search for product market fit, but you're on the cutting edge of it. And I would just say to the audience, something that you touched on that I want to underscore is education, right? Like paying attention to what's going on, who's building what, understanding how it works, what the different options are, because as this, industry continues to evolve and like I said, become more part of the mainstream, the opportunities for traders and investors to articulate a thesis, whether it's through a spot market or perpetual futures contract, or, if the CFTC changes their rules about commodities futures, all these different things, the opportunities and the options for investors and traders are ever expanding, and product market fit is still being determined. But you're at a really exciting place because you're right on the cutting edge of all of this. So unfortunately, I think we're going to have to wrap it here. But just really quickly, tell our audience, where can we send people to find more of you and your work online and follow along with the exciting stuff that you're doing?
Yeah. Twitter is probably the best place. My username is just at Alvin Hsia, ALVIN HSIA. And then you can also follow the Ventuals Twitter account, which is just at Ventuals_. If anyone knows the person with at Ventuals without the underscore, please let me know. We would love to get that handle. But right now it's Ventuals_.
Yeah, well, we can put a prediction market on whether or not you'll actually get the handle or not. Alvin, this was really great. I learned a lot. I'm sure the audience did too. Thank you so much for being here. I really appreciate it. It was wonderful.
Thank you, John. Appreciate you having me on. This is fun.
Thanks for joining us, everyone. We'll see you all next time on the Milk Road Show. Have a great day.
If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.